Ladies and gentlemen, good day and welcome to Control Print Limited 3Q FY24 conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on their beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectation, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatilia from Asian Market Securities Limited. Thank you, and over to you, sir.
Thanks, Aditya. Very warm afternoon and welcome all to the Control Print Limited 3Q FY24 earnings conference call hosted by Asian Market Securities. From the management side, we have with us Mr. Shiva Kabra, Joint Managing Director, and Mr. Jaideep Barve, CFO. Now I would like to hand this call to Jaideep sir for his opening remarks, after which we will open the floor for Q&A. Over to you, Jaideep. Thank you.
Hello, sir. You are not audible. Jaideep, sir. Hello, Jaideep, sir. You are not audible, sir. Ladies and gentlemen, line for the management has been disconnected. I will connect them. Line for the management line has been connected. Over to you, sir.
Yeah, hi. My name is Jaideep Barve, and I work as the Chief Financial Officer of Control Print Limited. Welcome all of you to the earnings conference call for the third quarter of the financial year 23-24. We appreciate that you have taken out your time from your busy schedule to attend this call. We wish you and your family a happy and prosperous 2024. Mr. Shiva Kabra, the Joint Managing Director of Control Print Limited, also joins me on this call. The detailed presentations have been put up on the website as well as in the investor presentation notification on both the exchanges for this call. Let me provide you a brief analysis of the standalone financial statements of Control Print Limited for this quarter. On a consolidated basis, the revenues were 89 crores and the period to date revenues are about 262 crores. The revenue for the corresponding 9-month period is 218 crores. For the year ended 31st of March 23, the consolidated revenue was 308 crores. On a standalone basis, our revenue is 84 crores with the period to date revenue about 249 crores. Just for information, the consolidated the revenue for 22-23 was 295 crores. The increase in the business thus augurs well for the growth trajectory of the company. We have got a very good revenue for this quarter in the consumables for pipes, paper, dairy, steel and healthcare industry. We've added new printers in the food, dairy and beverages sector. We consolidated our position in the sugar industry and the cement, and we achieved good breakthroughs in the plywood and laminate sectors. Regarding the expenses side, The consumption, which is the cost of goods sold, that has remained steady at about 40% of the sales. This is in line with the previous periods. However, we can definitely hope for an improvement in reducing this with better optimized buying strategies. The employee costs, depreciation, manufacturing costs, and other expenses are incurred in line with the business operations. Regarding the profitability levels, the EBITDA, PBT, PAT, and EPS, which excludes exceptional items, have grown by 10.3%, 10.6%, -2.6, and -0.1 on a Y-on-Y basis. There exists a considerable scope of improvement due to higher revenues and triggering economies of scale. We believe that there is a tremendous future for our company. The way forward is very exciting. We've got a focused marketing plan which will lead to increased sales. We've got diversified sales strategies. The install base for our company has increased. We've managed to have a good traction in track and trace division. We also hope to turn around the masks and the safety products business. Regarding the foreign subsidiary Markprint, we wish to make sure that the technology is also used in the Indian operations. The floor is now open for questions. Anybody can ask me and or Shiva for any clarifications they would like to have on the financial statements. Hello? 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 Hello?
Yes.
Yeah. I'm waiting for the first question.
Okay, sir. Thank you.
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first line is from the line of Deepan Narayan, Trustline MS. Please go ahead.
Good evening, everyone. Thanks a lot for the opportunity. So firstly, from my side, so we have got a very good increase in the gross margin side. But the EBITDA increase has been quite lower due to higher expenses. So do we see this current run rate of expenses continue, or we could see some margin improvement from here on?
Hello? Yeah.
Yeah,
You can go.
Yeah, so just roughly, I mean, we don't know, of course, where the margins go on a quarterly basis, and, the expenses are booked as, certain things happen. So it could be some, expenses which are higher or lower in a specific quarter depending on when they've been incurred. So it's difficult to predict, but like on an overall basis, as our revenues increase, we can, our margins should be in line with our revenues. Obviously, the idea is that technically our gross margins are quite stable, in a band, and then the SG&A cost should be stable and maybe slightly declining as we get a bigger economy of scale. So of course in this quarter, I understand your point is that the SG&A and other expenses were higher, but this, I mean, for us, like I said, in general, like things can change in a quarter up or down, but overall it's the revenue growth which will drive the margins. And, in our size of company, even a 2-3 crore expense in a quarter here or there can, change some of the other results. So can't comment too much beyond that. But yeah, so our main focus on the revenue growth, the rest of the elements of our business are stable. And then the margin should be accordingly stable and maybe slightly slightly increasing on the SG&A side, slightly.
Okay. Thanks a lot. And another question is on the user industry or our customer industry front. So how do you see this volume growth picking up for them and this capacity utilization overall for your customers going up? So do we foresee in short to medium term there will be many new printer machine orders is possible because of this capacity utilization of this current setup is growing up. So there are chances for higher growth in printer sales coming up.
Yeah. So in general, as the volume growth picks up, obviously our customers will have to expand their capacity, and as the capacity increases, it increases our printer sales and the number of prints that we do, which is in the end what gives us the revenue. So far I have to say it's been a bit strange. I think in that COVID time and the next couple of years, I think there was still a lot of expansion going on the FMCG, dairy, the entire packaging sector, pharma and stuff. I feel in fact in the last 1.5, 2 years, the industrial side has been seeing a lot of growth. I mean, I see a lot of projects happening here. So I'm talking about pipes, steel, tires, all those types of industries now seem to be more aggressive in terms of capex as compared to maybe the packaging sector. But each sector goes through its overall cycle up and down. But yeah, overall, I mean, if you ask me, the market seems positive right now.
Okay. And how do we see these non-CIJ machines for us? Do we see this competitive position for us has been improving because of a lot of new customer references, and we could reach newer categories in these segments as well, so we can establish our positioning there?
So I think if you look at the growth, overall, the non-CIJ has been going faster for us, and it's doing well. And we have some strong competitive edges out there. But, we don't get all the results of our competitors, so the exact, and we don't know the exact breakup of sales, so it's difficult for us to understand. But yeah, overall, I think it's actually, overall, the non-CIJ is helping us partly with the market share growth to some extent. Like I said, even our market share gains are always quite slow. Best.
Okay. Thanks a lot. All the best. I'll join back.
Thank you. Next question is from the line of Nayasar Parikh from Native Capital. Please go ahead.
Yeah, hi. Thanks for taking the question. So my first, I just wanted to understand on the printer growth. So can you give the number of how many printers we've sold and what has been the growth like?
See, for this quarter, we've sold about 630 printers, and the YTD is about 2,000 printers. As compared to the previous full financial year, it was about 3,208 printers. So that's the printer sales for the last 9 months.
Right. So exactly, I mean, it is broadly similar. There is no growth, right? And if we look at your last presentation, also had around 18,000. This time also it's 18,000.
Yeah.
So on the net basis, it seems like we are not adding too many printers. So what is the reason for that?
Yeah, so getting back, I think that we are adding printers. I don't know if you guys got a chance to see our previous, go through our previous 2 Concall notes. We even had some presentation that we made at one of those conferences. So I think that we've been actually been more selective about the customers that we are trying to sell to, and we have actually reduced the amount of sales to what we call the category C and D customers, even the B customers, to some extent. So that's because it was stretching our resources, and so what's happening is that the sales are happening, but we're getting a higher percentage of sales in larger customers who tend to use the printer more. So there could be two different guys. Like, it could be Britannia and some local biscuit company. So Britannia might make 10 million biscuits on the line. The local guy might make 5 million biscuits on the line. But in the end, for us, printers won. But we're going to just get double the amount of revenue from a guy like Britannia. So, in the end, it's a number of prints that count. For us, less than the number of printers. So that's a bit of a focus of ours for us to change the quality of the sale, and that's temporarily sort of reduce the sales growth rate of new printers. And now this is the second part where we have to, within the existing parameters, not increase the sales. So the first point was to be reducing the way we focus on it. But this is like one of those cultural things that happens, and it's going to take some time for the sales team to really figure this out and also increase. So, but I think we've got the capacity in terms of the number of sales people in the market in the period of time.
Got it. And in the customer segment that we want to operate, like, from a market share perspective, over the last 9-12 months, do you think we are stable, up, down? What would be your sense?
I can understand the question exactly. Could you just explain it a bit?
Yeah, sure. So, what I was asking is from a market share perspective versus the other three, in the customer segments that we are targeting or we want to grow, would our market share be, flat or up or down?
So I can't say specifically on what segments, because like I said, I don't get the exact details of the dominant market in March. But broadly, from the numbers we've seen, that like the four of us are still dominating the market. There's no structural shift that we have noticed, from our numbers. And it seems from the numbers we have and what we've seen of our competitors that our revenue growth rates seem to be a little bit faster than them the last 2 years.
Okay.
We are.
Okay, got it. And what would be?
Like I said, it depends. Like I can tell you this much. Like in general, we are much more strong in industrial, as you're aware, and we're strong in the packaging sector. So the industrial sector goes faster than, in general, that would lead to slightly higher growth rates for us. Even though we are focusing hard on the packaging sector, it's not like we've given up.
Right. No, understood. And for this,
just to answer to your question, see, we've got about 18,000 plus printers in the IB. So, and we update this number, with 500 or 1,000 printers, net printers. So, definitely in the next quarter, we'll update our figure. But it's 18,000 plus, so be rest assured about that.
Understood. And just if you could give the mix for this quarter between consumables and printers, the way you usually give.
The revenue, mean to say?
Yeah, revenue mix.
Yeah, so the printers contribute about 16% of our business. The consumables 62%, spares 7%, and service would contribute about 14%.
Right. And have we taken any kind of price cuts or something on consumables? I mean, what is the reason our growth has slowed down in this quarter? We were clocking 15-20% growth, 18-20% growth in the last 2 quarters. This quarter it's lower. Is there any specific reason?
No price cuts for sure, but no price increases. I think our pricing has been flat last. I think we took some price increases in the end of last year sometime, and they've translated sometime, in the end of last year, Q4 of last year, Q1 of this year. But since then, there have been no price increases, and even if you look at the discounting and the other structures, there's been no change. So the prices are absolutely stable. So whatever the growth is, it's all volume growth for the last, 8-10 months. So I don't think that, like I said, we from a quarter-to-quarter basis, it's difficult to see in a company of our size, because we feel that the pipeline looks good now. It can come sometime in some quarter, things can come in some quarter. You could sell an extra 40, 60 printers in one quarter, which could make, crore and a half difference. So it's, it's difficult for me to say what it is. Like, it seems good so far, is what I say, but the market can turn, in our past experience, pretty fast. And, it's not like completely going to stop because the basic growth is there, but customers can postpone some decisions, is what we've seen. But like I said, it's overall, we are seeing that we're doing bigger projects and bigger cases as our focus has changed. And these have longer gestation time. So the slight lumpiness in the printer sales is actually increasing, is what I'd say. Because when you do, since you're focusing more on the bigger customers, you're trying to do bigger projects with them,
Right.
If it goes through, it gives a slight bump, and then if it doesn't, then, it doesn't. So I'm expecting the printer revenue to be a little bit more up and down, but I think the rest of the business should be quite stable. And that's 80% approximately of our business,
Yeah. Got it. Just one last question. If you could just give an update on the mark print and track and trace, those initiatives, where are we and how is that going?
Yeah. So the mark print, as you know, we've been working more closely with them, and in fact, we are hoping to, we're trying to actually, we've got a couple of projects in India now where we are trying to look at how that works out. We've got a pretty good technology evaluation, which is the reason why we invested in them. So even they need to we need to increase their sales, and their capacity, both on the sales side and on the service side. They also have a pretty good product, and they can also increase in North America. They can cut some margins and be a bit cheaper here. So some stuff is going on. We have a bunch of stuff that's been happening out here in Control Print itself. So, like I said, it's been slower, but it's actually now, let's say, at least in the last 6 months, I'm much happier with the progress we're making rather than compared to before, or maybe the last 6-8 months. So there are some sales that we will not come up in Control Print. It's those sales, I think, we're probably marketing to do directly to some Indian customers that happens. So that part needs to be figured out. And we also put some specific sales resource in India, would look at some sales for marketing, some opportunities. So one of the experienced people we shifted in, and hopefully that should give us. I mean, like I said, these are also long gestation projects. So I just want to re-emphasize. If we start something now, we should not expect results for 6 months, is what I'd say.
Yeah.
But then at least it starts. And then as far as the track and trace goes, that's actually going quite positively. We are about to finish one of our major installations and start the second phase out there. So I think that will give everyone a lot of confidence in our own team and everyone else. We've purposely been a bit slow on it because we had a bunch of niggling issues or teething issues because we were starting it off, and we had that in a couple of smaller projects. So now that we've got that thing of how exactly to execute at pace, while maintaining the quality, now I think it's easier for us to go to and pitch to other customers. Yeah.
Okay. Got it. Okay. Got it. Thanks. Thank you, Shiva. Thank you, Jaideep. All the best. Thank you.
Thank you, sir. Next question is from the line of Devin from Mark Plus. Please go ahead, sir.
Hi, Jaideep. Can you explain why was the tax outgo significantly higher this year compared to the last year?
See, what has happened is that the proportion on the sale of investment, the sale of shares, has increased in this quarter in the 9-month period as compared to the previous year. And what we do is that we follow the Ind AS, and in the Ind AS, all the proceeds, I mean, we have to show in the other comprehensive income, which is below the line. Whereas we provide for the income tax as per the Income Tax Act and rules. So the hit of the income tax goes above the line. So that's why there's a skewed percentage change as compared to for tax as compared to the previous financial year.
Got it. But for the full year, the average tax rate would remain in that 17-18% ballpark, right?
I mean, we would still get about 17.47%. We follow 115J the calculation, so that should not be an issue.
Got it. And Shiva, so you mentioned that one of the reasons the revenue growth has decelerated is the focus towards big customers. Did I understand that correctly?
So we don't think it's decelerated. For us, we are happy with the results we've had. Like I said, we don't look at it so much on a quarter-to-quarter basis. So I'm looking at more like on a 9-month or a trailing 12-month basis, So we feel that's good. But more importantly, I would look at the CRM and I would look at the pipeline, personally, and we're comfortable with that. So yeah, but I said is that because of focusing more on larger customers, the lumpiness of the printer sales is going to increase. So we don't think that, I mean, obviously we're not do something that will decelerate our revenue growth, that would be stupid. So we don't want to do that. We feel that this will help us maintain the revenue growth without stretching our resources that much because, since we have a limited number of resources like this, what we'll do is we have to put that focus where we have the maximum return. And as you all know, we had an investment in ICIPL, and we hope to sort of improve the focus so that more of the C&D accounts are being handled by them, maybe even the BCD accounts, and we are only focused on the A and the massive customers of India. So it's not about reducing the revenue growth rate. It's about that there's going to be some more lumpiness in the printer sales over because we're focusing on larger customers, the individual cases of larger numbers, and it be up and down. So that's why. Whereas you said 1, 2, 1, 2, it's it sort of stabilizes your overall.
Understood.
Yeah.
So it's not like we will stop catering to the SME clients. That revenue will shift to innovative goods.
No. We are whatever people buy from Control Print, they're going to buy. Now, obviously, there's a price gap when you buy from us versus you buy from ICIPL or some of the smaller players. But the thing is that even if the price gap is there, sometimes it puts a bit of stress on our service, and our other resources that are there. And, so that's the reason we want to focus more on the larger customers, because what our understanding is that even for large customers, they want more in-depth focus. They want, so what they're paying Control Print for is reliability. That's one thing. But I think now from the sales side, they also want a lot more expert advice, So it's not like I sell the product, I'm buying the product because it's reliable. I think that there is also a feeling that, I'm buying Control Print because they are experts at this. So not only are the products high quality and high technology, but the guy is, is more of a relationship manager, to some extent. And so they'll address all my concerns. And also at the same time, they know about my business and they'll recommend the right set of products. Because now we have we're not just selling the inkjet printers anymore. Right? We're selling a bunch of, not just a continuous inkjet printer, we're selling a bunch of products. We have track and trace, we have other things. So we also need to make sure that we are reorienting ourselves to maximize, those sorts of solutions for our customers, rather than just, being a sort of product sales type of a focus. So it's a bit of a transition, we're part of it, but I'll also say it's going to take at least a year for the culture to change and the efficiency to come back to normal. So I think.
Understood. And finally, for Jaideep, so in the investor presentation, you have mentioned that manpower costs were higher because of annual incentives. But when I look at FY23, like Q3 of FY23, I don't see any significant jump in employee cost last year. So has something changed in terms of accounting this year?
No, there's no change in accounting. I mean, we have a cycle of performance appraisal. So the incentives are given to the higher management in this quarter.
Got it. But every year we give that in Q3, or that again keeps on changing?
That will depend upon the business needs actually. I mean, quite frankly, it ought to be done by end of Q2, but this time we have done in Q3. So.
Okay, understood.
Thank you. Ladies and gentlemen, a request to all the participants, please restrict to one question per participant and please join the queue for follow-up question. Next question is from the line of Rashmi Sharma from Summer Wealth Manager. Please go ahead.
Hello, good evening everyone. Am I audible?
Yeah, Rashmi, we can hear you.
Yes. So my first question is that companies have been doing well at 16% CAGR for last 3 years. So what can be the future growth drivers of the company for next 3 years?
So I'll answer that question. So you see, like in the end, like we're discussing, in the end, depending on the volume growth of the manufacturing industry in India, one way or the other. So nothing is in our control, frankly, in terms of the number of prints that are there. So we might sell machines to something like a Century Plywood. Depending on how many plywood boards keep selling in the end, and that's what's going to be the end driver for our revenue. So, and in the end, what that means is if the plywood industry is growing, if the number of plywood is increasing, then consultants' revenue will increase. If you're selling to some dairy or person, in the end, we are sort of dependent on the dairy industry to grow. So, or especially the organized packaging part of the dairy industry, which is where we focus. So, we are like more of a we don't have that like a complete control for the destiny in our own hands, because in the end we require like our user industries to grow, and we are dependent on them. We're not like a B2C company where I'm selling shampoo and I can do some sort of promotion and shift people's wallet from something else to something else. It's a compliance driven business also, so that's one of the main reasons to it. And then of course for a lot of customers it's because of branding and other things. So that's
okay, sir. So, sir, like, are there any plans or strategies to explore and expand in new regions?
No, I couldn't hear you that one clearly. Can you repeat that, please?
My next question is that are there any plans or strategies to explore or expand in new regions or new countries?
Yeah, so I'll just go through the thing, what we're looking at, because you asked about growth initiatives. So what we are trying to do is we've taken 3 definitive initiatives. One is we started Curious Code, which is our track and trace division. The second is we've looked at one exploratory product in the packaging area, which is called V-Shapes. And then of course we purchased Markprint, and we also started now to some extent more actively looking at some sort of digital printing, hybrid type printing solutions that we're providing to customers. So these are the 3 growth initiatives that we're doing beyond our standard coding and marking business. We're sort of well placed out in our standard coding and marking business with our product range and our technology, and of course this keeps upgrading. So like there's a 5 to 7 year cycle that we follow. We keep phasing our products and getting new ones in. But it's okay. We've got a good product range right now. So we're hoping that we continue to do well in our core business of coding, and maybe with the track and trace, with the packaging, with the part like digital printing, through Markprint or spark hybrid things. Like maybe we can get some extra sales. But these are like exploratory strategies to find out. And as far as geographical expansion goes, that's something we've looked at. We actually explored it quite actively. Then because of COVID, it just happened as we were like about to, sort of explore into the Middle East and Africa. And we had some sort of arrangement with KB for that, because then after COVID, that whole thing went cold. Then frankly, after that, in Sri Lanka, we had a disaster because I think we ran out of foreign exchange or some economic crisis, and we lost a lot of money because we had thinking a good market was growing, and I think they stopped us from getting our money back, and we lost a lot of. I don't know if Eddie could explain it to you, but we must have lost like 37 crores of that, because the money we had invested had sort of been converted into Sri Lankan rupees, and it had depreciated and all those sorts of things. So after that, there was some more pressure on us to consider expansion internationally with a lot more care. So we're still looking at it, and I still want to explore. We have taken 2-3 other initiatives already, and in a way, Markprint and other things are international in a way. So we're going to look at it, but right now I can't tell you anything, but it's not something we've given up on completely. But there were some reasons why for 3-4 years it was off the plate, and even now, Sri Lanka was a bit of a sore point for everyone, but now hopefully it's getting back on track. So just keep you posted. But I can't tell you something that if you're looking at it or not. If we do something, but it's not something we've given up on, but we still hope to explore it.
Okay, got it, sir. Thank you, sir.
Thank you. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead, sir.
Namaskar, Jaideep, sir.
Yeah, hi.
Sir, I missed your point, Shivaji, when you were explaining about our track and trace initiative and also on the V-shape part. If you could just elaborate, pardon me for the sake of repetition also, where are we in midst of these two initiatives, and what can we expect going ahead, especially from the V-shape part, and have we done with our some investment for V-shapes currently? This is my point.
Satyaji, so regarding V-shapes, I don't know, Jaideep would have published something. I think we had started a JV company, and I think there's a 10 crore, it was a sanctioned capital which we spent for part of money. Jaideep, I don't know, maybe provide those details are public, I think, but I don't know. Approximately this, if I remember correctly. I don't know if we spent the entire amount or investing the entire capital. We're going to do them in phases or something, but approximately done that. We have the V-shaped machine. We've invested in this thing. One of the key problems we're feeling is that the cost of the sachet is quite expensive. So I mean, the pharma industry can afford that type of expense, but even the premium cosmetic industry and definitely the food industry cannot afford that. So we need to see how we can lower the cost of the material, and that's something we're working on quite actively. We're also working on manufacturing one machine, which is of a lower volume capacity or lower speed rather, and that machine we're going to be manufacturing in India. And so these two initiatives, so we still need to work more on getting the cost of the laminate, the material lower, because for the customer, the per sachet cost is the most important aspect. So we are working on that, and it's a complex material to manufacture. It's also patent protected. So from both angles, of course the patents, we have those rights for it, but because it's a complex material to manufacture, there are very few people, if not anyone in India, who has that capability to manufacture this laminate. So we're still working. When we import from Italy, it's quite expensive. So that's one of the bottlenecks we have to look at. And but the market is there. We've seen good interest in the product because it's a premium product, and it has some functional use values also which are good. As far as the track and trace goes, just as I said, we are executing one project. we're at the end of the stage one, and we should hopefully get another part of the business. And then this is one of the bigger customers in India, and if that goes live, then it will give confidence to everyone in our own team, so we can be more aggressive on it in other customers.
But what goes around for the track and trace part? If you could just elaborate more on it, how does it work, and what is the ecosystem that you are trying to develop?
Okay, so the first part is like, so the track and trace is it's quite specialized thing. It's not the best place to explain it. But essentially what you do is you need to, the government of India, for example, in pharmaceuticals is mandated, for the top 300 brands to print a QR code on the thing. Now, even there are some other markets, like some rest of world markets or other types of things where they have to trace their product through the entire supply chain. So what I would do is, suppose, I'm just giving you an idea, suppose you have a blister, okay? Let's take it as, say, a disprint. I will print a QR code on the disprint. Each different disprint strip will have a different QR code. Each of them will have their own serialization, which we'll create, and what we do is we do through a blockchain type of a software, so there's no duplication of the same. What that will do is they will have a QR code, and then suppose I take 10 disprints and I pack it in one carton. Then when we have a camera, so forth, that detects that each disprint that's printed, whether it's printed perfectly, whether it's scanning at A grade or B grade, what sort of level of scanning it's happening. And if it's not scanning at the criteria that we set, it will get ejected from the line. So that's the ejection-rejection mechanism that's there. Then it will get agglomerated. So when it's going inside the 10 packs of disprint, let's say going in one carton of disprint, like one small carton of disprint. Then on the carton, there'll be another code. That code will enclose the information of all the 10 individual blisters of disprint which have gone inside the carton of disprint. Then when that disprint gets packed in another shipper carton, that will also contain a code. It will also contain the information of, say, 100 cartons get packed in one large carton. When we enclose that, we will get the information of those 100 cartons also, so that in that carton, each of the 1,000 blisters that are there. Then what we can do is you use that for your line maintenance, so that first when anyone clicks it, we have a shortened URL which can authenticate the product for the user. That's one part of it, but then you can use for product diversion, you can use it to also measure, how much whether it's being sold in the right place or not. So sometimes people have, free samples that they give their MRs, and they want to check whether it's being sold or what is given as a free sample or it is not. So, there's many various different types of metrics you can use. But of course, one of the key things to do also is manage your inventory across all locations by having this sort of system. So there are basically, it's like a sort of system that needs to be there. There are multiple cameras in each place because each barcode needs to be scanned and verified. The quality of scanning of each barcode needs to be there. There needs to be an ejection, rejection in each part of the line. The software, of course, the printer is one critical part of it, and that's maybe the most difficult part. So, but the agglomeration needs to be there. There's a separate thing where then all the data that comes, nothing is stored in our printers, nothing is stored locally. I think we upload it to Amazon or something. So for each client, you can set up their own cloud stack on Amazon, and then I think on AWS or something. But of course, if they have their own internal database, it can be uploaded there. And so, it's on the thing. But it's not, we never control the data because legally we cannot do that. So if we do it for the client, and then, so we've got all that sort of data out there. And then, of course, then it's used for the customers to validate all their transactions and, to validate the authenticity of the product to maybe, sometimes these, in pharmaceutical not, but in some other types of industry, people also might give a discount on that, like, maybe like you give your details and, you can win a trip to South Africa or something like that, something else can happen. So some people can also use for marketing reasons. In pharmaceutical, it's used for compliance. So, that's the basic idea of where this thing is.
Okay, so this will lead to incremental consumable demand. I'll just
understand that if you see one of those flow diagrams from our team, and if you actually see it on the site, like, so there's a more complex thing, if you found you. So, but maybe we can try to put some sort of video or presentation on this next time. We'll try to do that.
Okay, why not? We can.
So just to conclude, sir, this will lead to incremental demand for our consumables, or the printers, any special other category of printers will be required for this purpose, or the existing ones will only work? And how the consumables is the one where the demand will be?
So the existing printers work in general because you need a higher quality of print to maintain a QR code. You require high quality printer. Normally, in pharmaceutical, frankly, 95% of our installations are done with our thermal inkjet, if not more. So that is the printer of choice for this application, our thermal inkjet. And we're strong in the thermal inkjet, so it works well for us. Of course, there's some exceptional ink revenue that doesn't come to this specific team. So I don't know. We have some internal thing that we do, but of course, there's also an AMC to maintain this entire infrastructure, because it is for the customers. He doesn't buy our printer and someone's camera and someone's software. We have to do the entire thing. And so the software capabilities and the product capabilities and the integration of the entire line, it's like a sort of slight type of automation or compliance automation that you're buying, because they come at different angles. And of course, the printers are an important part of it. So it's more strategic in nature. I mean, of course, people will print extra because now they have a QR code. But in the end, people will print whatever the government tells them to print. So, that's the basic rule. If the government tells them to print a QR code, then of course that takes a good amount of ink. So that's good for us. But, it's a regulated industry. It's not for everyone. It's for specific like pharmaceutical, and even now some agrochemical and seed customers, I believe, have to implement the same. So it's for those compliance-driven industries. For the rest of the people, there are a lot of people who use it, but that's mainly for some marketing campaigns. You give this and you get you buy 4 and you scan them and you get some discount on something, or some sort of Paytm credit or whatever. So those are different things, but they're not a compliance-driven people.
So the small point I have is how have the consumable utilization levels improved, and what are we expecting going ahead with the improved sentiment, as Shiva sir mentioned, from your customers? What would be the increase in the utilization levels for the consumables? And for mass printers, we have observed that for the large. For the last
one question at a time, just because.
Okay. Yeah. Okay, sir. First I would like to understand how the utilization levels for our consumables are going to trend going ahead with improved sentiment from our customers.
Sakiji, as you know, we keep doing some debottlenecking. So we're still operating between 50 to 70% capacity at Guwahati. So we still have that capacity. So, we have added some more equipment there in the last year and a half, even in this year. So we've continued to maintain that capex to, cater to that increase in capacity that, for the fluids manufacturing. More on the specialized side, but yeah, it's there.
So the utilization levels have not improved, sir? When you were mentioning about...
If we sell more consumables, we also have increased our capacity that much. So, it is our factory capacity has also increased. Our processing capacity for manufacturing the consumables has increased. So we are still less than 70% capacity utilization at Guwahati.
Okay, sir. And sir, for the mass printer part, the revenue has declined, I think so, for the year ending 23 versus 22. So any specific reason why they have posted lower turnover?
For what?
For the
mass
print.
Yeah, just because. So okay, we have one person, a team, somebody ex-Magnum who's looking at it, and some other things. If they're doing better, it's not doing badly. But I'm it's good, and that's working fine. So there's no pressure on them. It's good as it is.
Okay. And so in rupee terms, what have been our investment as on date?
In what?
How much in Mark Printer? How much have we invested? I think so now 80% we are owning the company.
Yeah, in Markprint we have 1.75 million euros is the total investment we paid. No, 1.7 million euros. 1.7 million euros is the total investment made in Markprint from the beginning to now.
Sorry to interrupt. Sakit Kapoor, please come to queue again. A request to all participants, please restrict to one question per participant and please join the queue for follow-up question. Our next question is from the line of Chinmay Nima, Reset Capital. Please go ahead.
Thank you for taking my question. Could you talk about our wallet share? Specifically, if you are supplying to a client, then are we the only supplier, or are there other suppliers as well? Could you tell us what's the typical wallet share?
Can you just repeat that question? I'm sorry about that. I couldn't hear you clearly.
I just want to understand what kind of wallet share do we have for a typical client. So are we the only supplier of printer and the consumables, or are there other players out there?
No, so for a typical client, like I said, most clients tend to have one supplier in one factory. Some definitely have 2 or even 3 of us, and tendency is, like I said, in one factory to keep one supplier, but if something in one factory, they can be 2 suppliers. There is no saying, it could be less for us, it could be more for us. But in general, as far as the industry goes, so our measurement is that this year will be like 2,000 or 2,100 crores. Last year it was about 1,800, 1,750, 1,800 something. So like I think it's going to go about 11-12% this year. And obviously now if you take our revenue was 291 crores, how much was it? Something like that last year, and the industry was approximately between 1,750, 1,800 crores. So then you get an idea of our revenue market share overall. And this year, of course, we can take that the market will be 2,000 or 2,050 crores, somewhere between that size, and whatever our revenue is. So if we calculate it, it's approximately somewhere between 16 and 17%. It depends on 16. I feel like 16.5% is the number that what we're doing right now. Maybe 16, 17%, something like that, is our revenue market share of the overall of the industry. And then from customer to customer.
I was actually referring to the wallet share, but that's all right. I understood. Secondly, could you talk about the nature of our contracts? So, what kind of contracts are these? Long-term contracts? When do they get renewed? Some color on that aspect. And additional part of that question is, what kind of price hikes are we able to take? Like, what has been the trend in the past, and how do you see this going in the future?
Yeah, so in general, our capital equipment lasts for between 10 to 12 years. So an average working life of a printer once a customer purchases it is approximately that much. That's the working life. And then what happens is customers tend to start replacing the printers once about 9, 10, or 11, 12 years old. With some new equipment, they'll upgrade their lines also a lot of times, and they'll upgrade the equipment also a lot of times, depending on the situation. So that's the approximate life of our printers. And so once the customer purchases the printer, of course, it's his property. And we have a tag on the printer, so as long as the printer belongs to him, he's locked into using our consumables, so to say. So and that's obviously where the majority of our revenue comes. And like in general, like I said, that's the life of the printer. In some cases, we do have a lot of contracts, and it's been increasing as a percentage of our turnover. where a lot of customers outsource the entire coding and marketing business to us, or at least factory to factory, and we charge them on a per scope bar or per pipe or whatever type of basis, and that so normally those contracts 3 years at the very minimum to 6 years. It depends on customer to customer, depending on how the whole calculation works out for us. So yeah, those are the different types of sales that are there. But I would say obviously for us, we always prefer the capex. We just sell the printer and then it's customers, property, and even though the margins are a bit higher on the when we do the entire business for the customer, so the margins are normally higher in that. We normally prefer that the customer buys the printer. And of course, the last point was about the price hikes. So we don't normally hike regularly every year, but whenever there's a cost increase, then we pass it on. So our last price hike was in Q4 of last year. Yeah, in Q3, Q4. So in Q3, we announced it last year, and then by the time it got implemented, it was Q4 of last year, Q1 of this year. But yeah, we might increase the prices, depending on the foreign exchange rates and depending on the type of inflation that's happening. But service is the only area we increase the prices every year in our service charges, but not necessarily in the inks or something. Sometimes we might increase the printer price. So it just depends. If our cost increases, then we increase the prices, but normally we don't tend to just increase the prices if there's no increase in cost.
Thank you. Our next question is from the line of Karan Patila from Asian Market Securities. Please go ahead.
Hello, am I audible?
Yeah, you are, Karan.
Yes, Shiva, I just wanted to understand, given the ongoing global supply chain challenges, do you think we can get some benefit of this in the near term?
No, there's no supply chain challenges right now.
Mm-hmm.
So, I mean, at least for us, there's not been that much of an issue. Definitely, we had our problems in that COVID in the post 1.5 years post that. But now I think it's quite
No, I was
nice.
more referring from the Red Sea point of view. Given the global disruption in the supply chain, you think we can have some benefit?
So in the end, it depends. If that means more manufacturing is going to happen in India, then we benefit. If it's just like a temporary, their freight rates for other people is increased, I don't see it affecting us, too much. So from what I understand, anyways, in the Red Sea, it's more of the oil and gas type of, bulk products which are going to be more affected. So obviously, in the end, if India's manufacturing picks up, then they're going to get a chunk of that. They're going to get a chunk of, the print, the coding and marking requirements, the track and trace requirements, the other types of things that they require. So in the end, like I said, that's obviously one of the negatives of our industry, that we can't create our own demand. We can't create some sort of a food snack and advertise it and do it. We depend on someone else to sell his food, and then we will benefit from that. So that's sure.
Yeah. Thanks for the clarity. Any closing remarks you want to make?
Yeah, I think that I just want to first thank everyone for coming. We really appreciate your time. And for us, this was a stable quarter. There's a couple of transitions that we're trying to do, which we'll see. One is, of course, we've been implementing our own sales strategy, our new sales strategy this year, and we're 3 quarters into it. And I think it's going to take another, 4 to 5 quarters for, it's the cultural shift, the mental shift is much more difficult than anything else, frankly, than, doing meetings. So it's going to take another 4 to 5 quarters for, I think, that to be streamlined. And hopefully that will then result in, not only better sales, in terms of which we're already doing in terms of that the quality of sale is improved, but also like the quantity will bang up. So we'll have a dual benefit. But again, like I said, there are some items which people asked on, and I don't know, quarterly, as Jaideep has explained very, perfectly, like, there are some like changes that happen on a quarter-to-quarter basis, and, it just depends. Maybe, like a trailing 12-month basis is a better thing to look at. But, it's everyone's call. But of course, like the three initiatives that we've done in marketing with Curious Codes and with our, like our own track and trace division. So I think, and V-shapes, I think like we see, especially V-shapes might take a little bit more time because of the cost of the materials, but I think that there should be some traction at least in the Curious Codes in market. We feel more positive that we should get something like this better integration going on in these projects now. So it's and hopefully it's still contribute to us in the long term. But again, in the short to medium term, it's this core business that's going to be the main driver for our company.
Yeah, thanks. Yeah, Aditya, over to you.
Yeah.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Yeah, I also wanted to thank you, Karan and AMSEC for hosting this. Thank you.
Yeah, thanks, AMSEC. Thanks, Karan.
Welcome.
Have a good day.
Thanks, everyone. Thank you.